All right, so this is part 4 of the 5 strategies that I use on a day-to-day basis. Today we'll be going over the power of 3 concept, which is accumulation, manipulation, and distribution. Okay, so the power of 3 concept is fairly simple to grasp. It starts with accumulation, which is just a range with equal highs and equal lows. What we need to see is price manipulate below the accumulation low or above the accumulation high. In this example, it'll manipulate below the accumulation low. We want to see price come and manipulate below a session low. Or if it was in the opposite direction, we'd want to see it manipulate above a session high. But in this example, we've manipulated below a session low. We'd wait for price to come back up and close above the session low and target liquidity that's above the accumulation high or the session highs that are above. And for the trade to become an A plus setup, we'd want to see the manipulation come down below the session low into a 15-minute fair value gap. Once it respects the 15-minute fair value gap, closes back above the session low, we can then target the accumulation highs or the session highs in the opposite direction. Often you'll see next to the price action when I'm trading this candlestick, and that candlestick represents either a 1-hour candle or a 4-hour candle. It's extremely important having this next to price action because on the open of a new 4-hour or a 1-hour candle, this small body and small wicks indicate the accumulation. When we start to manipulate, we'll see the body of that 1-hour or 4-hour candle make a move like this. The key thing to pay attention to after that expansion down is, does this 1-hour or 4-hour candle have a large top wick or any body above? If the answer is no, then we can assume that this 4-hour candle is going to make its move in the opposite direction, forming the top section of this candle, which looks something like this. The body will then come back up, leaving this large bottom wick on the 1-hour or 4-hour candle. Price will then start to distribute high, forming the top section of the 1-hour or 4-hour candle. Okay, so here's a perfect example of the power of 3 concept in play. Over here, we have a new 4-hour candle open at 4 p.m. This is what the 4-hour candle looks like. We have a small wick on the top side and the bottom side, a very small body, and that represents this accumulation, which is just a range with equal highs and equal lows. Once we've identified that accumulation, we'd be waiting for price to either accumulate above session highs or below session lows. But in this example, we can already see that there's a 15-minute fair value gap below New York low. So the probabilities of the manipulation coming to the downside are much greater than they are for the manipulation to be going to the upside. So let's see how price plays out. Okay, so you can see that the 4-hour candle has just made the bottom section of the body, and it's respected this 15-minute fair value gap. It's also swept New York session low. Now all we need to see for the confirmation of the entry is this close back bullish inside this session area. And there you go. We just had this 15-minute candle close bullish above New York session low. So we'd enter the trade there with our stop loss just below this recent low, and we'd target the accumulation high, or we can target these session highs. Another thing to keep in mind, we know that the 4-hour candle doesn't have a large top wick and would be anticipating this 4-hour candle to be making its expansion up, creating the top section of the 4-hour candle. Now let's see how price develops. Okay, there you go. Hit full TP, we took out the accumulation highs and just reached the session highs over here. So let's walk through a bearish case scenario of the PO3 concept, manipulating above session highs into a bearish 15-minute fair value gap, and then distributing down to take out previous session lows. Over here, we have the accumulation, which in all honesty, it's not a super clean level of accumulation, but nevertheless, accumulation doesn't always form to a textbook equal high, equal low. What we can see over here, we have these equal highs, these session highs, so London and New York. So we'd be anticipating in this example, price to manipulate up into this bearish 15-minute fair value gap, respect it, and then close back below these session highs. Let's see how price develops. Okay, we've just swept London session high and New York session high. You can see that price wicked through that bearish fair value gap that was just above those session highs. It's now closed strongly below these two levels. So that's where we would have entered. Down here with our stop loss just above the high, and we'd be targeting these session lows. And just like that, hit full TP. That's the PO3 concept in a bearish case scenario. All right, so I hope all of that makes sense. You can see how the PO3 concept works with sweeping session highs and sweeping session lows, and it also works with bearish and bullish fair value gaps that are just above session highs or session lows before price distributes either to the upside or to the downside. Give this one a watch a few more times, just so that you fully grasp the concept of PO3. I'll be leaving the next video to volume profile somewhere around here.